RateScope here. Silver just rocketed 22% from yesterday's low, from $65 to $78. Spot silver hit $77.16 per ounce, up over 20% from the recent low. Silver soars 22% and retakes 78. Bitcoin pumped $11,000 in the last 24 hours, reclaiming 70,000. Roughly $340 billion was added to the crypto market today. Over $1 trillion was added to the U.S. stock market in the last 2 hours, with the Nasdaq and S&P 500 fully recovered from yesterday's sharp decline. The Dow Jones is up 950 points to a new all-time high. Current prices as I'm recording: silver Western spot, $78, Shanghai spot, $82. Quick note for new viewers: this channel has never and will never ask for money in any form. Anyone doing so using my name is a scam. This channel is founded on factual analysis, not repackaged hype that copycats are selling. If you're looking for hyped analysis, check out the copycats who will spin my words into whatever narrative fits their agenda. They'll tell you it's moon time when it's green and doom time when it's red, whichever keeps you clicking. The RateScope team covers both bullish and bearish factors with verified data, because that's how real markets work. It's truly hilarious watching people promise certainty in uncertain markets. I only operate under the handle RateScope on both YouTube and X. Now let's get back to the analysis, because this isn't about predictions. It's about understanding price action and fundamentals. Silver went to 65 yesterday, the lowest point of this correction. Right now it's at 78, around a 22% increase in 24 hours. You wouldn't notice it if you only follow mainstream headlines, but the reversal is violent, and it's happening across all risk assets simultaneously. Bitcoin is up around 17%, pumped 10,000 from the lows. ETH surged 18%, reclaimed 2,000 from lows around 1,750. About $550 million in shorts were liquidated. Over $304 billion was added to the crypto market in the last 20 hours. The Russell 2000 is up 3.1% today, adding nearly $100 billion to market cap. It fully recovered from yesterday's dump and turned green on the weekly. This shows investors are allocating capital back into higher risk assets. Small caps are reacting faster than large caps. We're seeing a similar pattern in crypto. Bitcoin dropped nearly 35% over the last 3 weeks, from around 90,000 to about 60,000. But over that same period, Alt/BTC pairs are up roughly 11%, showing strength in higher beta assets even while Bitcoin was weak. The pattern is clear. Stocks, metals, crypto crash and recover every single day. Same pattern over and over in 2026. At some point, you stop calling it volatility and start calling it what it really is. Markets are manipulated. News is manipulated. History is manipulated. But you can't hide truth forever. Now here's the critical question. Did a former JP Morgan metals chief call the bottom in silver? The Post notes, corrections don't kill bull markets. Blind consensus does. Silver lease rate in London jumps to 6.1% for 1 month. That tells you everything about the recent crash. This was leverage and paper getting flushed, not a collapse in physical demand. If supply were loose, professionals wouldn't be paying top dollar to borrow silver right now. A 6.1% lease rate means physical is tight and getting tighter. Silver's SEO index, now at 106.35 and rising. Silver also remains in backwardation. What happens when silver price is artificially low? Physical disappears. COMEX open interest data provides a major signal. On Thursday, with gold making a higher low versus Monday, total open interest in COMEX gold fell to just 400,952 contracts, the lowest daily total since December 14, 2018, down from a high of 555,309 just 2 weeks ago. What does it mean? As specs trickle and then rush back in, open interest will expand again with price. While day-to-day price changes fluctuate, lows are very likely already in, and prices will generally trend higher in weeks ahead. China exchange silver stockpiles are plummeting. Since 2020, approximately 6,600 tons of silver have drained. That's a 90% draw in 6 years, equivalent to 30% of annual global silver supply. Physical silver demand in China remains strong. SGE plus SHFE now hold a combined approximately 850 tons. After today's draw of roughly 73 tons, 11 more days like this and there is no silver left in those vaults. Chinese buyers are using low prices to stack silver, SHFE and SGE vaults continue to drop to new lows. Because China is the world's largest consumer of gold and silver, this situation may push global gold and silver into a serious out-of-control state. Geopolitically, the Iran situation is escalating. Iran refuses to end nuclear enrichment in talks with the U.S. The U.S. announces new oil sanctions on Iran moments after talks end. Iran refused to allow Trump to save face and come to a deal. What comes next may be significant. Geopolitical risk premium is returning to markets. That typically supports precious metals. If you're panicking in silver here, you're watching the wrong time frame. Drawing a long-term regression trend on silver divided by US M2 money supply from the mid-1980s, the recent rally breached the historical range. The current pullback may look big on a daily chart, but in the long-term view, it's merely a retest of a broken range, until proven otherwise. Importantly, price hasn't even crossed the 2011 extreme yet, and some are already writing silver off. Timing may vary, but there's a lot of steam left in this move. Perspective over noise. Common sense, which by the way is even rarer than silver. You didn't really think this would be straight up, did you? This is one of the biggest games in human history, and big games are never easy. But if you focus on fundamentals and apply common sense, the pain becomes much easier to handle. Strength comes from understanding. Now let's talk about silver miners because they're set to explode in 2026. Silver surged into triple digits recently, hitting over $120 before pulling back to around $70 now. But the real story is that miners have barely kept up so far. Look at the historical leverage. In the 2002 to 2011 bull market, silver rose about 300%. Top silver miner Pan American Silver soared around 1,500%, 5 times the metal's gain. On average, silver miners typically deliver around 3 times the move in the underlying metal. What happened in 2025? Silver ripped higher, up massively. But silver miners, including the SIL ETF, lagged badly, barely matching or even underperforming physical silver at times. Why? Analysts were still pricing in old $35 to $40 silver levels through the rearview mirror. The 2026 turnaround trigger. Big miners start reporting earnings this month. Producers will show explosive cash flow. For example, a 10 million ounce per year producer can be making over 1,200% more profit than in earlier quarters with lower silver prices than at present. You can't ignore those numbers. Analysts will have to upgrade valuations fast. We've already seen a precedent in gold miners. Gold climbed from around $1,300 in 2019 to recent highs around $5,500. Many gold miners lagged initially but then ripped. Examples like Agnico Eagle going from about $40 to $300. Silver miners lagged gold miners too, but the catch-up phase is starting. At the same time, banks don't have infinite balance sheets to trade precious metals. Bloomberg has highlighted that structural constraint. They can't suppress price forever with unlimited paper. Balance sheet limits matter. When physical demand overwhelms paper supply, repricing happens. Now the COMEX March crisis timeline. 21 days until 429 million ounces of demand meets 103 million ounces of supply. Breaking the COMEX isn't just a meme, it's what the numbers point toward if trends continue. As of February 5, 2026, March 2026 open interest, 429 million ounces. COMEX registered silver inventory, 103.5 million ounces and falling. February 2026 delivery rate, 98%. 18.72 million ounces delivered from 19.11 million ounces open interest. Inventory drainage rate, about 785,000 ounces per day. January 2026 deliveries, 49.4 million ounces, about 7.27 times the 2024 level. If March 2026 sees even 25% of contracts stand for delivery, COMEX would need 107 million ounces, potentially more than will be available by first notice day on February 27th. If delivery rate matches January-February intensity, say 50 to 70%, we're looking at 200 to 300 million ounces of demand against 85 to 103 million ounces available. Is the long-anticipated COMEX silver default only 3 weeks away? Now here's the honest risk assessment. History suggests there may be more downside ahead for Bitcoin. Every major Bitcoin bear market over the last 14 years has seen drawdowns of at least 75% from all-time highs. Lows of 93% in 2011, 84% in 2015, 83% in 2018, 76% in 2022. Polynomial trends show each successive bear market bottom getting shallower, but the next projected trough still points to roughly 70%. Applying that to the current move, a 70% drawdown would imply around 38,000 for Bitcoin this time. The silver/gold ratio has been tracking Bitcoin directionally. For silver and gold to stabilize and recover, a pause or base building in Bitcoin is crucial. As long as BTC remains under pressure, downside risk in silver and gold persists. Bitcoin is the canary in the coal mine for this risk-off move. So while silver bounced 22% from 65 to 78 and Bitcoin reclaimed 70,000 and risk returned violently today, Bitcoin's technical structure suggests more volatility is possible. This doesn't mean the bottom isn't in. It means confirmation is needed before calling the all clear. Perspective on technicals. Mid-December, silver was at 65 with RSI near 80 and everyone bullish. Now we're back at 65 recently, but RSI is 30 and sentiment is bearish. Identical price level, completely inverted psychology. Does this guarantee we've bottomed? No. Markets can stay oversold longer than expected, especially during deleveraging events. The 47% crash happened in 7 trading sessions, which shows how fast sentiment can shift. Violent moves down often lead to violent moves up, but the key word is often, not always. Gold's long-term parabolic structure remains intact, suggesting the broader precious metals bull isn't broken. But silver needs to hold current levels and build a base before we can confirm this as the low, rather than just a bounce inside a larger correction. However, structural indicators point to exhaustion of selling pressure. COMEX gold open interest at the lowest since December 2018. Silver lease rate, 6.1%. Backwardation continues. China vaults draining 73 tons in a single day, 11 days at this rate until empty. Registered COMEX silver at 103 million ounces versus 429 million ounces exposure. 21 days until March 1st notice. February delivery rate, 98%. These are not signs of abundant supply. They're signs of paper leverage flushing while physical tightens. 3 takeaways. 1. Silver rockets 22% from the 65 low to 78. Bitcoin plus 11,000, reclaims 70,000. Crypto adds $340 billion today. US stocks add $1 trillion in 2 hours. Dow at a new all-time high. Russell 2000 plus $100 billion, fully recovered. Risk-on returns violently and fast. About $550 million of crypto shorts were liquidated. Dip buying aggressive across all risk assets. But Bitcoin's technical structure suggests a 70% drawdown is historically normal, potentially around 38,000. More volatility is possible. We need confirmation before calling a definitive bottom. 2. Silver lease rate at 6.1% says this was a paper leverage flush, not a physical demand collapse. Silver backwardation continues. Structural tightness persists. COMEX gold open interest at the lowest since 2018. Speculative longs are washed out. When they return, open interest will expand with price. Lows are very likely in or close. China vaults drained 73 tons today. At this pace, they're 11 days from empty. 90% draw since 2020. Chinese buyers are stacking into weakness. Long-term silver versus M2 charts show a retest of a broken range, not the end of a bull trend. Price hasn't even taken out the 2011 high yet. Perspective over noise. 3. The COMEX March crisis is about 21 days away. 429 million ounces open interest versus 103 million ounces registered. February delivery rate 98%. January deliveries 49 million ounces, 7 times 2024. Drainage 785,000 ounces per day. If March sees a 50 to 70% delivery rate, that's 200 to 300 million ounces of demand versus 85 to 103 million ounces of supply. Silver miners are about to report earnings, showing explosive cash flows from higher prices. Historically, miners deliver 3 times leverage to the metal. Some names did 1,500% in the last bull. Analysts will have to upgrade. Bloomberg reminds us banks don't have infinite balance sheets. They can't suppress prices forever. The unresolved tension. Did we just see the low at 65 with a 22% bounce confirming the bottom? Or is this a relief rally before Bitcoin completes a typical 70% bear market drawdown, dragging silver lower again? COMEX open interest at multi-year lows says specs are washed out. Lease rates and backwardation say physical is tight. March delivery math screams shortage. But Bitcoin correlation and historical bear market depth say more downside is still possible. The next 3 weeks will determine whether a March delivery crunch forces a structural repricing or whether deleveraging continues first. Data will tell us. Right now, structural tightness is extreme, but technical confirmation is still developing. Do your due diligence. Understand the risks. Bitcoin may still have more downside based on historical patterns. Volatility will likely continue. But COMEX registered 103 million ounces versus 429 million ounces exposure March, 3 weeks out. China, 11 days from empty vaults at current drain. Lease rates, 6.1%. Backwardation ongoing 22% bounce from 65. Risk on returning across markets. Know your time frame. Invest with logic, not hype. Make decisions based on analysis, not emotion. RateScope out.